Well, turning now to the presidential election, which is just 1 week away. While political pundits are making predictions, it's not just poll numbers that can potentially tell us who will prevail. Economic trends could be giving us some clues about what or who the markets are pricing in. Joining us now for more on the election and the markets, Monica Guerra, head of U.S. policy at Morgan Stanley Wealth Management. Thanks for being here.
Yeah, thanks for having me.
So the polls, I won't call them useless at this point, but everybody talks about it's a coin flip. So you are looking at some other metrics that have in the past correlated with what we see. I'm intrigued by GDP in particular. We just got a GDP reading today of 2.8% in the third quarter. You've been tracking GDP versus sort of favorability. Mm-hmm. What have you seen? What does it tell you about what could happen?
Yeah, typically during election years, you'll see GDP and candidate favorability go hand in hand, right? They track each other. So if you have a strong year, right, you have strong growth, then you're likely to have, put a check in the favorability for the incumbent who's running. So while Harris isn't the incumbent, right, she is part of the incumbent party. So that could be a check mark in that box. However, we've actually seen some conflicting indications when we're thinking about sentiment. And if you're looking at the Michigan Consumer Sentiment Index, we haven't been this low in the October of an election year since 1978. Okay, and what that essentially signals for us is that could be in the challenger's favor. So when people do talk about a coin flip, from at least an economics perspective, it very well could be.
So that's no help then.
I thought it was interesting, Monica, you also pointed out in your note how the Republican long basket, though, is outperforming the Democratic long basket. Mm-hmm. So a couple questions. One, what are in those baskets? And two, what is that indicating to you?
Yeah, so the Republican long basket has been outperforming since March. And what we put in these different baskets were 12 different ETFs, each representing different sectors and industries that might benefit from different policy changes and proposals. So for example, on the Democratic side, you're looking at everything from infrastructure, clean energy, thank you, as well as managed care, right, and others. And then on the GOP side, right, it's more of your cyclicals, your defensives. You're looking at materials as well as crypto, things that might benefit from deregulation, right, Bitcoin beneficiaries, et cetera.
And so the Republican long basket, I mean, there's been a lot of talk about the so-called Trump trade doing well in the market recently as market participants are trying to price that in. Again, I would ask how accurate that, I mean, especially the last, or I shouldn't say the last election, the 2016 election showed us the danger in trying to game it out. But now that happened, is the market good at predicting, I guess is the bottom line question.
The market, I would say, tends to be good at predicting, but we are in this really interesting environment where voters are incredibly split. So if you look at 20 of the last 24 election cycles since 1928, every time that there's positive market performance in the 3 months prior to election day, that tends to favor the incumbent. The incumbent wins every time in those scenarios. So yes, top level, high level, you're looking at a positive for Democrats, but then when you dig deeper into the beneficiaries, they're telling a different story. We're not in the position of calling the election, right, one way or the other, but I would like to highlight that there is a market anticipation for potential deregulation, right, as well as for companies and sectors that might benefit from tax cuts. One of the things we do want to highlight, though, that was out of consensus in our call and in our view on our baskets is the defense sector. So we called in early February that the Democrats are now the new party of defense. We got some pushback on that out of consensus view, but markets have since been catching up, right, to this call.
What did you mean by that, Monica, the new party of defense?
Yeah, so essentially, if you're looking at Harris's policies, she's not only looking to, extend, right, Biden's current involvement on multiple fronts, but we do believe that there's some signaling that we could get more re-engaged with NATO, et cetera. So essentially, providing fiscal support, continued policy support for those traditional military industrial complex beneficiaries. Now, on the other side, the GOP is taking a more protectionist angle, right? So Trump, yes, while we're likely to get still support for defense spending, the beneficiaries are likely to look different. So when you're looking at that traditional category, it's tracking very closely with Harris's odds right now.
So Monica, as you said, you're not here to call the election, but I'm sure your clients are saying to you, what should I do? We see these are the baskets. Which basket should I buy? What are you telling them? Or are you just sort of giving them the menu and leaving that up to them?
Right now, we're giving them the menu. I think what it is that it gives you your list of choices for post-November 5th, right? Once we have a result, however long that takes. So essentially gives you a place to start for preparing for stock picking post the election once we have a finalized result. The other thing we're talking about is tax policy in 2025, and just reassuring and communicating very strongly that if you are expecting increased taxes, right, on no matter what the outcome, that there are not just tax advantage securities, products, et cetera, but that we can help, right, with those tax mitigation strategies on the market side of the equation.
And then just lastly, on the menu question, is that usually what you do, or is this election unusual because it's so close that you're taking that tack?
It is unusual, right? If you have sort of a sure thing or many indicators that agree, right, and you can start to position going forward, that signaling starts earlier. But right now, we're really advising folks to hold on, not pile in, because if you think about the GOP long basket, since it is this incredibly tight environment, those could potentially be the biggest losers. So we're not, pushing clients either way, and really instead focusing on the known, that is taxes are coming up, right? And that we're going to be really focused on that through the year and providing guidance.
Monica, great to have you here on set. Appreciate it.
Yeah, happy to be here.